Hello everyone, and welcome to another edition of the Forex Technical Market Update. My name is Beyond Dale. I hope everyone is doing quite fine. Okay, what we have in front of us is a chart of the US dollar index, and as you can see here, the market was in a triangular consolidation pattern that started roughly in 2005, and we see that the market was in some consolidation up until May of this year, and where we saw the US dollar pull out of this triangle, and that was pretty significant technically. We're looking at the pullout point. We see that the market broke through the trendline resistance, came back down, tested the trendline support. Because remember, this trend line was acting as resistance, and support, resistance then turns into support once it's broken, and the market found support at the trend line and has been going up ever since. So that's what's happening on the weekly US dollar index. Now, for those of you who are unfamiliar with the US dollar index is a composite of a basket of currencies, namely the euro, the Japanese yen, the Australian dollar, the Canadian dollar, the British pound, and it's represented in one index. And it's very useful because it gives you clues as to where the dollar could be heading. Now, another significant thing I'm seeing on this chart is the fact that we are up against former resistance. As you can see here, let me just remove the triangle for clarity. This is a weekly chart still of the dollar index, where we have a high at this point just below the 90 level. This was made in about February of 2009, and we have another high slightly below this previous high number 2 was below the previous high and was made in, I would say, about May of 2010. So what we have now, this is a third high, and the market is up against an area where we have seen the US dollar turn around. So let me just draw a resistance line. So the US dollar is currently up against significant resistance on the US dollar index, and this comes in at the high that was made over here in 2009 was 89.62, and the high that was made here last week was 89.55. So we're right up against this resistance point. So for the bulls for the US dollar to continue moving upwards, we need to see the market close on a weekly basis above this resistance line here. Market needs to close above this resistance line. Okay, so that's what's happening in the US dollar index. Let's take a look at some other currencies, namely the euro. And we see that the euro on the weekly chart is in a consolidation, and the market is currently testing this trend line. First point, second point, third point. So the market is at support in the euro. This is the weekly chart of the euro, and it's good to look at the weekly charts for a higher level bird's eye view to see what exactly is happening in the currencies. Sometimes we focus too much on the 15-minute chart or the hourly chart, but it's good to know what the critical and long-term support areas are, and we are up against critical support. Looking at the daily chart, we see that the market did bounce off of this trend line that was drawn off the weekly chart, and we could see a situation where the market retests this trend line again, and it will be interesting to see if the market is able to close below the trend line and we see further gains in the US dollar, or the market turns around. We have had a significant run up in the dollar ever since May, and it could be time for a pullback. Resistance on the euro is at this minor swing high at 126, and support is at the low of 122.50. So 126, 122.50. The market closes above 126 and then closes above 128. That could be a sign that we are headed for a pullback. Okay, taking a look at the Japanese yen, and this has been a pretty significant move upwards. We see that the market ran up, made a move from in mid-October, made a move from roughly 106 up to 122. And one of the things I keep saying with the markets is that it's possible to make large pip movements in the markets. This move is over. It's easily over 1,000 pips, 1,002, over 14. This is over a 1,600 pip move in the market in only one and a half months. So I often put out the fact that it's possible to make 900 pip moves in the markets, and this is an example of a pretty significant run up in the USD Japanese yen. Actually, our members was able to bag over 1,100 of these pips for our Forex income system members who are following the Auto Trader program. Okay, so that's the USD Japanese yen. Taking a look at the Australian dollar is still in a pretty significant decline. The market broke below resistance. We had some support here, pardon me, at the 86.50 level, and the market broke below. We had a slight pullback and is continuing its move down. Now with the Australian dollar, because we're at resistance with the US dollar index, that could stall our gains in this currency pair, or the losses, sorry, in this currency pair, and we have to keep an eye out on that. Looking at the gold market, it's Monday morning. We see that gold is down, and for gold to get bullish on gold, we need to see the market close above this 1260 level. If the market can close above 1260, that will be promising for the bulls. But for now, gold is in a bear market environment, and what we need to do is just follow what the market is telling us. We have a series of lower highs and lower lows, so that is what we call a downtrend. So the rule is, in a downtrend, you should be looking to sell the market and not buy the market. Okay, another market that's trending fairly nicely is the Canadian dollar, where we see the market has been on a up move ever since July of this year, and the bottom is at 106.50, and we are now at 115.80. So this is almost another 1,000 pip move in a currency pair. 1,000 pips. And the key is to try to identify markets that are trending and get as many pips in a trending market as you can. Okay, we have had a pretty significant year so far. Looking out at 2015, I see the potential for some good market moves in 2015. And as Forex traders, the best thing you can do is prepare yourself for these moves and prepare yourself to profit from these markets in 2015. 15. This is Beyond, and thank you very much for listening, and until next time, I hope you have a good trading week. Thank you.